1. This is a cooperative service committee meeting. It's 10:20. And then we are 4 in there, myself, O'Toole, Eunice Pearson, and Mayor J.T. Clayton. So we started the item number 301, director reports, and this is Shane.
Thank you, Chairman Haas. I'll give a brief update this morning. Most of this meeting you'll hear from finance and reports from our year end, but I would also add in that we've completed our 2020 reporting on some of our grant funding, MSI gas tax and the MSP stimulus. We've done the reporting required for that, and that in early May, we'll be coming to Council with an update on the start of the Budget 2022 process, which we will be launching here shortly. I also wanted to give a brief update on ISIP stimulus. This was one of the other stimulus programs provided by the provincial federal governments last year. Of the 14 projects in ISIP that we submitted, we have now received approval on all but one of them, which is the pound, and that's still in progress. We haven't received a no on that. To get to project approval, though, we have had to set aside some discussion on eligible costs for some of the projects. You'll see in one of the later reports that we're recommending setting aside $521,000, which is a maximum that we believe may not be eligible. Doing this allowed us to get project approval and to move forward with the projects this year, which was important to us. We felt that setting this money aside was a prudent approach. And again, this is a maximum amount. We're still having discussions with the provincial and federal governments on these ineligible costs. I believe that some of this will be deemed ineligible, but it's unlikely that it would be the maximum. But that is our prudent recommendation at this time. You'll see a little bit later. From procurement, one thing they wanted to note is they're working with our GPREP folks on developing agreements with area motels and hotels for emergency evacuation preparedness. This is something that has come up in previous years with either flooding or wildfires where Grande Prairie has become a center. And we're just getting a little bit ahead of the game and having some standing offers in place with area accommodations. Communications and marketing wanted to highlight that for those interested in updates on the downtown rehabilitation project, that you can sign up for regular email updates at cityofgp.com/ourdowntown. That's an excellent way to keep updated with the latest information if you're not able to tune into Monty's reports every second Tuesday. Corporate efficiency. Wanted to highlight that on April 19th, we'll be launching the 311, which is a way for residents to access further information at the city. This is part of a larger strategy in how we're improving resident access to city information. But the first stage is 311, and you'll see some communications going out on April 19th for that. Also, as part of the Canola Key project, there has been some updates to the city website providing further information relating to the scope, full scope of the land development process. So we encourage you, those that have development questions, to check out the Canola Key project on the Business and Development tab on the city website. And with that, I'll answer any questions, and we'll have lots of information from Danielle here later this meeting.
Thank you very much, Shane. Any questions for Shane update for today? I know the lot of questions will be coming. Go ahead, Kevin.
Yeah, just a comment. I'm really looking forward to the 311 launch. It's been a long time coming. We've gone through many different processes, but nice to know that there's a launch date, and I'm looking forward to it. So thank you very much for all the hard work that everybody that's got their 2 cents in has put in, and I appreciate that. Thank you.
Thank you, Kevin. Any other questions? If there's none, then sorry. So we can move to 3.2. This is 2020 audit finance statement for Grande Prairie. Danielle, please.
Thank you, Chairman Haas. So the first report here is for the Grande Prairie Public Library. The recommendation is that committee receive the audited financial statements of the Grande Prairie Public Library for the year ended December 31st, 2020, for information as presented. You will note that the library's net financial assets have decreased slightly, around $155,000, and as well that they did see a deficiency of revenue over expenditures of $145,000. The library did end the 2020 fiscal year with a slight decrease to reserves, but the year-end balance in reserves ends at $1.7 million, designated for a number of different purposes. The Grande Prairie Public Library's independent auditors have issued an unqualified opinion. An unqualified opinion means that the financial statements do present fairly in all material respects the library's financial position and results of financial activities for the year following Canadian public sector accounting standards. And the MGA requires that the annual financial statements are prepared for any controlled organizations and that the results for the year ending December 31st, 2020 is presented for information, and this is consolidated with the City of Grande Prairie's audited financial statements. Thank you.
Thank you, Daniel. Any question for Dylan?
Great, thank you. Just one question I had was, I noticed that there was approximately a $700,000 increase in the building rent grant revenue that's given to the city. I'm curious if that reflected significant new costs we're finding in the building, or if that's just, we're just doing a better job of accounting for costs we already had.
Thank you, through the chair. Yeah, so that is what we call a gift in kind. So it has no net effect on either the city's financials or the library's financials. But it is more of a true reflection of what that building cost is for the city. And so that's why you've seen that number, that $2.6 million this year.
Great. So just to be clear, the costs we're putting into operating that facility for them haven't increased. We're just capturing them better.
Correct.
Great. Thank you.
Thank you. Thank you, Dylan. Thank you, Daniel. Any other question? If it's not, I'm looking for the motion. Kevin, go ahead.
Okay, I will, I got it here. I just got the wrong screen up. I move the recommendation that the committee receive the audited financial statements of the Grande Prairie Public Library for the year ending December 31st, 2020, for information as presented. Thank you.
Thank you, Kevin O'Toole. Motion is on the table. Any question on that? I don't see any. If it's not, all in favor? Oh. One motion carried unanimously, 4-0, so that's great. So the next one is our airport annual statement in Grande Prairie Airport. Daniel, you're again.
Thank you, Chairman Haas. So again, we're recommending that committee receive the audited financial statements of the Grande Prairie Airport Commission for the year ended December 31st, 2020, for information as presented. In 2020, the Grande Prairie Airport Commission saw a deficiency of revenue over expenditures of over $5.6 million. COVID-19 has substantially impacted air travel in 2020 and resulted in significantly lower revenues for the airport. Again, the Grande Prairie Airport's independent auditors have issued an unqualified opinion on the financial statements. This means that they present fairly in all material respects the Grande Prairie Airport's financial position and activities for the year. This is following Canadian public sector accounting standards. And the MGA requires that these annual financial statements are prepared for any controlled organization and that the results are presented for information, and they will also be consolidated into the City of Grande Prairie's audited financial statements. Thank you.
Thank you, Daniel. Any question on Daniel's list statement? Go ahead, Dylan.
Great, thank you. In terms of revenue the city gets from the airport, I know we've got our lease agreement with them for about $250,000, but what's the property tax payments from the airport?
Through the chair, as this is a controlled entity of the city and city-owned infrastructure, we do not collect property taxes from the airport.
Gotcha. It was just mentioned in the accounting notes, and that seemed odd to me because I didn't think we got any. So thank you.
Any other? Wade, go ahead.
Thanks, Chairman. It's not a question, more of a comment. Just want to thank, as bad as that bottom line is, I know how hard this last year was on Brian and his team at the airport. They did a lot of changes. They did a lot of layoffs. They all took wage rollbacks. They did everything they possibly could, and it's still a really sad bottom line number. But it just kind of reminds me of 2 phone calls I already had this morning for business owners and just what's going on. And this bottom red line number is happening to a lot of businesses in our region with the lockdowns. And so I certainly hope they lift soon, but I want to just thank Brian and his team for their work on this, or this number could have been a lot worse.
Thank you, Wade. Any other question on this audit one? I don't see any. I'm looking for the motion.
Eunice, there you go.
Eunice, go ahead.
So I will move that the committee receive the audited financial statements of the Grande Prairie Airport Commission for the year ended December 31, 2020 for information as presented.
Thank you, Eunice. Motion is on the table. Anybody any question this? One. All in favor? Motion carried unanimously at 4-0. So thank you. The next one again, Daniel, 3.4 financial update for quarter 2021.
Thank you, Chairman. So this is our unaudited financial statements and supporting information for the city only for the year ended December 31st, 2020. So our recommendation is that committee receive the unaudited financial statements and supporting information for the year ending December 31st, 2020. Also, that committee recommend council approve transfer of the 2020 operating surplus of $2,369,000 to the future expenditures reserve. And our recommendation is to restrict as follows. So for the July tax penalty decision to waive, we're estimating a cost of $600,000. As Director Burke alluded to, we have potential ineligible ICIP expenditures of $521,000. We have additional costs or potential costs for the Recreation Activity Center. This is for water, sewer, meter costs, as well as a second floor additional space. Presented at the Infrastructure and Economic Development Committee meeting was the Hughes Lake Energy Study. So there's $200,000 for that. And the remaining we could leave unrestricted within that reserve for future use. So I will respectfully assume that you've read the report, and I will just highlight a few items from it. So when we look at the statement of financial position for the city, you'll note that accounts receivable this year is much higher than it usually is. Mostly, this is a result of our 2020 MSI allocation still being receivable at December 31st. It was collected in March of this year. Additionally, both the MSP and ICIP funding approved in 2020 were not yet received, so therefore sitting in receivable at year end. Also, deferred revenue has significantly decreased from what it was this time last year. A significant portion of the change in balance is due to an accounting adjustment that was made. So the decision was made to appropriately treat the remaining unspent funding from the province in relation to the old bypass. When we first received this funding, it was classified as a liability for the city in deferred revenue. However, upon further investigation, it was determined that there was no liability associated with these funds for the city, and the correct placement is in reserve. So the adjustment was appropriately made this year, and the funds are now restricted in future expenditures. When we look at the statement of operations for the city, revenue collected was in 2020 was almost the same as it was in 2019. Although we saw significant revenue losses due to COVID-19, we were able to reduce the impacts of these losses with growth in the city's tax base, as well as the receipt of municipal operating funding. That's the most funding from the province. The lower spending in 2020 is also a result of COVID-19. With facility closures, decreased operations, came significant salary savings, as well as less spending on contracted and general services, materials, goods, and utilities. When we look at our operating variances, so when we compare our actual operating results to our operating budget, for the year ending December 31st, 2020, the city had a final surplus of $2,369,000. This does equate to approximately a 1.32% variance on the city's total operating budget. As of December 31st, the city manager's area, infrastructure and economic development, community services, and corporate services all ended the year with surpluses, while protective and social services and fiscal services did see deficits. Included in those operating variances at year end are salary variances. These, again, as I alluded to, are the result of layoffs, reduced hours, redeployments, delayed hiring, turnover, and vacancies. And as of December 31st, 2020, it was approximately $8.8 million in savings for salaries. When we look at reserves, the net change to the reserve balances was an increase of just over $40 million from this time last year. This, as I explained, a large portion of this was due to the accounting adjustment that was made for the remaining money from the province for the bypass. So this has been moved to future expenditures reserve. Additionally, we've set aside some funding for our capital tax strategy going into the future. And as well, we do some year-end adjustments to appropriately classify unspent capital dollars and restrict them within future expenditures reserve. When we look at capital at year-end, capital projects the city has left to complete are funded either via capital tax, reserves, or grants. At December 31st, approximately $24 million of the $53 million in unspent capital funds are funded from grants. For long-term debt, the city does continue to pay it down and not take any new loans. Long-term debt at December 31st is $124.7 million. The city is well within the legal debt limits required at the end of 2020, with approximately $125.8 million remaining. This is at Council's policy of 80% the legal debt limit per the MGA. Finally, procurement activity in the fourth quarter. 5 tenders were awarded over $250,000 for equipment, engineering projects, and the Activity and Reception Center. And that concludes my report.
Thank you, Daniel. That was very interesting thing there. Any question for Daniel on the quarterly update? Wade, go ahead.
Thanks, Chairman Haas. Appreciate the report, and it's nice to see that we've got a pretty healthy surplus, so thanks to administration for getting us to that spot. A lot of organizations like we're seeing with the airport aren't in that position, so I like the recommendations in the report. I think what this is basically doing, in my thoughts, is really safeguarding probably a surplus again for 22. I mean, I think with this, we've kind of helped all the areas that we're going to be in the red this year. We've kind of funded them. But I guess I have a question for Ms. Whiteway that way, I'm assuming that, but are we lining up already? I know we're only 3 or 4 months into this year, but are we lining up already with all the closures and things that we've done already to be setting up for another similar surplus for next year by allocating these funds to take away some of the shortcomings we would have had in this budget this year. Is that something you can speak to yet, or?
Through the chair. At this point, I'm unable to really speak to where we're looking to be for 2021. It's quite early, but we are in the middle of our first quarter end close. So you will see that 2021 report coming forward in May. So that will include kind of what our projections are for this year.
And if I can, Chairman, just one other question, and I'm not sure if it's for Ms. Whiteway or somebody else within administration, but if we were to not approve this plan and said, hey, maybe, I'm not saying this, but if there was more of an appetite to get some of that unrestricted money to help economic development and recovery, is there areas out of here that could be taken out and we'd still be fine to operate this year? And the reason I'm asking that is part of the surplus was born on a COVID. And so part of me would like to safeguard a little bit more for things like that. And when I look on this, now we've got $648,000 is really all that's left for council to try to help with economic recovery and revitalization of organizations in the city. So I'm a little bit concerned with that. So I'm not sure if somebody for the administration could ask if there's options there, or if we did want to try to use some of this money. I think, speaking for myself, I think some councillors thought there was going to be a little bit more money left from surpluses to be used for other projects. So it looks like they've been mostly allocated with this report.
Shane or Daniel, anything?
And Danielle, feel free to jump in as well. But at this stage, this is the only money we have available for any additional additions to the 2021 budget. I would note that there's no pressure to allocate all of it today. Our recommendation is to move this into the remaining unrestricted into FER. So if there were some further ideas that council wanted to explore for how to expend this money, we could look to a meeting at a future date. Today is really about sort of our pressing needs, some urgent decisions, and then asking to allocate to unrestricted FER.
Okay. Thanks for that, Director Burke. I'm fine with it going there today, just that I appreciate there may be a conversation down the road to look at, is this the right allocation, and maybe more money could be added to other projects. So thanks for that.
Thank you, Wade. Jackie, please.
Thanks. Chairman has just to a comment for Councillor Palat. In the items that are listed as possibilities, Hughes Lake Energy Study, obviously, and Recreation Activity Center, there's $600,000 there that hasn't been decided. As well, just a reminder, the $521,000 is sort of a maximum potential eligible expenses. So although it identifies clearly today that there's showing $648,000, that's a recommendation from administration and a fairly, in my opinion, fluid number. So if your intent and council's intent is to look at spending money further down the road in regards to additional economic development support, COVID recovery, if you want to call it, I still think those opportunities are there. So as Director Burke had mentioned, today doesn't have to be the day that we make the decisions on these, other than the one item there being the, for sure the July tax penalties are a reality. And I also support the fact that we need to earmark money for ineligible potential expenses. But I still think that council will have an opportunity for further discussions on what we're going to do with these funds. And I do support, the recommendation there of putting this money to future expenditures reserve. Thanks.
Thank you, Jackie. And any other questions? Dylan?
Great, thanks. Just to that conversation, for me, I'd also highlight that we haven't touched our financial stabilization reserve at all through this crisis. And if there's going to be a time that you save money for a rainy day for, I can't think of a more rainy day than this. So I'm pretty comfortable talking about helping our taxpayers get through this time and helping our residents that are really struggling survive, and helping our businesses still be here a year or two from now to give them jobs. I'm pretty comfortable talking about touching that stabilization reserve if we've got good reason to. A question I've got as we look at the future expenditures reserve, it's just getting to be a fairly complicated pot of money with a lot of restricted things in it. I'm wondering if we could get just a recap or a summary of how that pot of money is planned to be allocated so far.
Danielle?
Thank you, Chairman Haas. Yeah, it can be, so the intention with that is to flow through when there's capital that's not spent, that's not grant related. We kind of use that reserve to make sure we're restricting the funds. But we have some larger items to note. So like I said, we've moved that bypass money there for appropriate accounting treatment. If you remember, we also allocated some funding for the RCMP retro pay that we potentially or will have to pay out at some point. Additionally, we've spent some money in the 2021 capital budget. So, of course, we've restricted that in there. And some carry forwards, like I said, of old unspent capital lives there until we can use it up on finishing those projects. So of the total 50.3 million, 42.5 is restricted. So it does leave 7.769 million as unrestricted.
I'm wondering if it might be possible, and I don't know if this is an ask for a few minutes of work or hours and hours of work, and I don't want this if it's hours and hours of work, but I'm wondering if it is relatively easy to get, if it would be possible for council just, even if it's through email, to get a summary of what's in there. It doesn't really change my decision making here, but I just think it's important for us to have a better grasp than I personally have right now on that.
Absolutely, that's something that could be provided.
Great, thank you.
Thank you, Daniel. Any other question on this? Kevin, go ahead.
Yeah, if there's no other questions, Chairman Minhas, I would be prepared to make a motion.
Yeah, I got one question before the motion gets in.
Sure.
Then you mentioned we'd save $8.8 million in the salary and wages. Is that due to COVID the shutdown area, or there's some other reason? Just clarification. I think it's coming to next one, Consolidate, but.
Sorry, Councillor Minhas, I don't know about the rest of the group, but I couldn't hear you. Could you repeat that question?
I said that when Daniel said we'd save $8.8 million for the salary, I just wondered if it's due to COVID shutdown area, or there's some other savings in that our labor cost.
Thank you, Chairman. As the $8.8 million that was saved in labor costs, that's included in the $2.369 million operating surplus. So that was just to highlight that a portion of that surplus was really from those tough decisions to make layoffs, cut back hours, and do some redeployments.
Thank you.
Does that answer your question?
Yep.
Thank you.
Okay, motion is on the table, Governor Tools. Is there any question on it? If it's not, all in favor? Motion carried unanimously, and now we are. Next item is our 2020 audit consolidated audit finance statement.
Chairman Haas, we have one more motion on item 3.4.
I thought it was that was quarterly, wasn't it? Hello? Sorry, Arlene, which motion is that one?
Chairman Haas, is committee interested in making the second recommendation as outlined on item 3.4?
Oh, sorry. Okay. Thank you. Somebody can put, okay, Eunice, go ahead.
So I will make that second motion recommending council approve the transfer of the 2020 operating surplus to the future expenditures reserve as outlined in the recommendation.
Thank you, Eunice. Any question on the support budget? Shane?
Just for clarity, as council are considering this, this is our recommendation, but approving this would make some decisions on restricting some of these funds, and I would just highlight particularly on the additional costs for the rec center and using the $200,000 for the Hughes Lake study. This would come to council in the future, so there would be another opportunity to amend this. This is our recommendation, but I would just want some clarity whether this was intended to go to council and there was some further debate, or whether this was actually is this your decision point at this time?
Thank you, Shane, for clarification. Eunice, go ahead.
Thank you. My motion is that we recommend council, so it will go to council with the specifics, including the Recreation Activity Center and the Hughes Lake study.
Oh, thank you. Clarification, yeah. Any question on the motion? If it's not, all in favor? Motion carried unanimously. And now, Arlene, can we move to the next one then? Now we go to the 2020 Audited Consolidated Financial Statement.
Thank you, Chairman Haas. So the final report for the year end is the 2020 Audited Consolidated Financial Statements. The recommendation is that committee recommend council approve the audited consolidated financial statements of the City of Grande Prairie for the year ended December 31st, 2020. So I will actually introduce our auditor from Fletcher Mudrick, Devin Wardley. He is going to walk you through the audited consolidated financial statements. Thanks.
Thank you, Daniel, and Duncan, welcome to you.
Okay, thank you, Chair Haas, and thank you, Danielle. I'd like to start off by thanking Danielle and her team. It was our 5th year of doing this audit since we became the auditor, and every year it just seems to go a little bit smoother and better. The systems improve, or maybe it's just that we grab a better understanding of them, but it just seems that we're very happy with how this engagement goes. And so with permission, I'll share my screen just so that we're all looking at what I think will be the same document, which, because of my screen setup, you might see me in profile for a bit of this presentation. The statement that you have, the auditor's report, is an unqualified report, and Danielle spoke to that when she showed the airport and the library financial statements. An unqualified report, meaning that it's fairly stated and free from material misstatement, and by no means does this indicate that there are no misstatements or errors at all within the statement. But what that concept means, and I'll just reflect back on materiality as a reference point for committee. In an auditor's professional opinion, we need to make a determination. Are we looking for errors in the range of pennies? Are we looking for errors in the range of dollars? Or what is the type of error that would change a knowledgeable user's opinion of the financial statement? So this year, the materiality threshold that we used as auditors was $3.6 million. When we perform the audit, we need to leave some room for errors that we may not find. And so you perform an audit at a lower level than that, and the performance materiality that we chose was $2.7 million. So again, just to reiterate, now that we have those numbers for context, we feel that a $3.6 million error in the statement would be that tipping point at which a knowledgeable user may change their opinion of the results that are showing in there. Unqualified auditor's report, which is the goal of administration and certainly the goal of the auditor. the statement of financial position. Danielle and I will use this opportunity also to introduce Nick Townsend, who is a CPA and sitting in on this meeting. He's the audit manager of this engagement, an associate at our firm, and has been involved in this audit, if I recall, for all 5 years that we've had it since becoming auditor. I lost my train of thought for a second, but when we discussed this statement, we were looking with Danielle, we were looking at how to reconcile it between her report and how the financial statement reports, specifically when it comes to the restatement regarding the bypass dollars. And just for some history on that, when the Alberta government transferred the bypass to the city and said, here's $20-some million worth of cash to take this off our hands and to acquire this problem from us, at the time that the December 31st rolled around, there actually wasn't a formal agreement in place with what that $20 million meant. And so with the administration at that time, as well as with our understanding of how government typically works, we kind of all agreed at the time, like when this agreement comes through, there's certainly going to be stipulations for the use of this money. And because we felt that there was certainly going to be stipulations for the use of that money, the best place to put it was into deferred revenue at the time. Now that the dust has settled on that, so the following year, it was sitting in deferred revenue. The money hadn't been spent, and all parties were still content with what we figured things would mean on that. And now that Danielle and her team did a bit of a deeper dive into the agreement once it was received, we saw that it was, in fact, unstipulated money from the Alberta government, shocking as that might be. So the right move was to take it from deferred revenue and put it into reserve. And so what that's done on this statement compared to past years or compared to Danielle's report is, from a financial statement perspective, we need to restate those numbers at the time at which they happened. It's a retroactive adjustment. And so when Danielle's report states a decrease in deferred revenue from this time last year, as auditor, I'm looking, and deferred revenue actually went up. We've just restated some numbers in here. And so when we get back to note 23, which is highlighted throughout these statements, we could get into the detail of that and what it means. Otherwise, Danielle did explained a lot of the variables in here and what's happened to the statements. I do want to point out land held for resale. It's not that new inventory was acquired by the city. What happened here was the Montrose and the Resources Road plots of land that were previously held as land under tangible capital assets. The decision was made by the city this year to put those into a inventory position for resale. So that is a current year decision, not a restatement. So it's just a transition of land from tangible capital asset in 2019 to land held for resale inventory in 2020. Investment in government business enterprise is Aquaterra, and the net equity that the city holds there.
Thank you very much. I hope I'm pretty sure I will. Thanks very much.
Councillor Blackburn, thank you. So the investment in government business enterprise is how Aquaterra is accounted for in these financial statements. It differs from the library and the airport. The library and the airport are considered 100% subsidiaries of the city. And so the library and the airport's cash, the library and the airport's accounts receivable, all of their line items from their financial statements add to the city's lines at each component of the financial statement. Whereas Aquaterra, as it is controlled by votes, but there are other parties involved, and it's defined as a government business enterprise. It comes in under what's a modified equity consolidation. So that means that what you look at in your budget as being a dividend revenue, these financial statements look at that as a decrease in your equity in an investment, in that if you have an investment that's worth $100 million and it pays you $3 million, your investment's now only worth 97, but you have $3 million in the bank. So that's kind of how that works. But as Aquaterra gains net income, gains net assets, your share of that value increases, or as much as your share of the value may not increase, depending on the different ownership levels. As the value goes up, your pro rata amount of equity is held. So that's detailed in note 7 once we get back to there. Otherwise, I think that's the statement of financial position. Again, the net financial assets, I've spoke to this in the past. This would be your working capital if you were coming at it from a corporate mindset. The only difference I would suggest is that long-term debt, only $7.5 million of that principal there, it comes due in 2021. So there's a long-term component of that. So this is even from a working capital, there would be a little bit of reconciliation there. But still, your balance sheet is showing stronger now than it was in the prior year. Tangible capital assets, your property, plant, and equipment has increased. Detailed schedule on further down the statement. Inventory consumption and prepaid expenses. So your net assets have moved up $40 million from the prior year. I should point out, Chairman Huss, that I am open to questions as we go. Please feel free to ask as we're moving through, and don't necessarily save questions for the end if you feel that it would be a good time to ask as we're going through it. I'm perfectly fine with that.
I have one question. Then,
sure.
When you said the asset like this, so it's $6,690,000, is that included Equator asset, or they have nothing to do with our?
No, so those particular assets are included up in the $117 million invested in government business enterprise. So that would be your, let's say it's 70% share of Aquaterra's balance sheet, which includes their net tangible capital assets less their debt up in there. So this would be your share of their retained earnings, if you will. The tangible capital assets of the city, however, on a consolidated basis, do include the airport, and they do include the library.
Okay, thank you.
No problem. On to the statement of financial activities and accumulated surplus. Your income statement, if you were coming from a corporate perspective, there's been a lot of variance from budget, which is unusual. But when you boil it all down, I hate to blame one thing and explain all the budget variances, but it's highly accepted that a lot of things happened due to the pandemic that kicked in mid-March last year, and your budget was set obviously well before that.
Mm-hmm.
But I do like to point out specifically in expenditures that the $175 million of budgeted expenditures does not include $30 million of amortization expense. The city doesn't budget for amortization expense, and that's a common practice. That's highlighted on Schedule 5, but it's not easily apparent here. So where it looks like on one hand you spent $10 million more than was budgeted, included in the actual expenditures of $185 is $30 million of amortization. So this net of that, you're actually $20 million underspent versus budget, if you will.
Mm-hmm.
I think that the deficit this year is highly influenced by the airport, as was previously referred to, and at the end of it, you move from the $790 million of accumulated surplus, adding in the $40 million consolidated excess, and you're up to $830 in accumulated surplus. And that is detailed in schedules later on as well. Consolidated statement of changes in net financial assets brings us to reconciliation of the working capital. In simple terms, it's quite algebraic in nature. We take the $40 million of net income, work through the changes to the non-financial assets and liabilities, and it brings you to it reconciles the change in financial assets. And then the consolidated statement of changes in financial positions is your traditional cash flow statement. And so this speaks to cash that was generated from operations, cash that was generated from investing, and cash that was used in financing and capital activity. Something that might be of interest here to you is that in 2021, with the $14 million of new borrowing bylaw that was arranged by the city coming in early 2021, your financing activity will highly likely be a net cash generator, as there'll be $14 million of cash coming in from financing, and your long-term debt repayment will not exceed that. So that will be, for the first time in a long time, a net financial cash inflow for the city. Of course, what that $14 million is going to do is it's going to increase your capital spending, most likely, or if at very least it will be funding capital. So your capital activities will likely increase as a larger cash drain, if you want to look at it that way, to offset the new debt that came in. Those are separate items as much as on a financial perspective, as much as they are very much linked in real life. Cash consists of cash in the bank and on hand, as well as the portfolio investments, because those portfolio investments are quite liquid. Consolidated statement of changes in accumulated surplus. So this is we always want the financial statement user to be able to open up the 2019 financial statement, open up the 2020 statement, and we don't want to have big variances between the 2019 comparative column versus what we showed and approved last year. So we do take last year's financial statement figures as previously disclosed, and work through the prior period adjustment to come to what we're saying is the new restated opening balance. So the two numbers here are the $20 million that was sent from deferred revenue and moved into reserves. So you'll see your restricted surplus previously at 75 is now opening at 95. And then a less significant error that was identified this year when going through the tangible capital assets that were held in land was, we'll get to that in note 23 as well, but there was a $1.5 million error that was noted dating back a number of years in there as well. So our equity and tangible capital assets was increased by $1.6 million to show that new land balance, or the land that was discovered and the cost of that land on your statement. So from those opening balances, then it just runs through the changes in each of these buckets of surplus to come to the closing. Consolidated schedule of tangible capital assets now. This is a much more detailed by type of asset. Reconciling back to the statement of financial position, I had mentioned up in inventory, the land inventory, that there was an increase, and so this was the transfer of land that was previously identified as to be used for operations, that's now available for sale. So that's that transfer that's a little bit unusual that you don't see every year. Also shows how accumulated amortization moves from start to finish, and a comparative to what each of those balances was in 2019. Schedule 3 being your breakdown of property taxes. Schedule 4 being the breakdown in grants. This one is highly susceptible to the changes that the pandemic brought to us and the new funding changes that were identified at the provincial and federal levels, and how those didn't align with expectation when budget for 2020 was approved. This is a nasty schedule if you're trying to say to match actual revenues to budget. But at the end, that was the reality of 2020. It doesn't make budgets look good versus actual results. Consolidated schedule of expenditures by object. I'll draw back to amortization not being budgeted, but being a real accrual expense. Schedule 6, consolidated schedule of segment disclosure. I rarely know exactly how to talk about this because protective services comes in looking like it's completely underfunded. Transportation looks like it's completely underfunded. Well, everyone looks completely underfunded with the exception of general government. But general government gets the benefit of being credited with the entirety of the property taxes that are collected, as much as your internal budgets know what those property taxes are funding and the intent of those dollars coming in. from an accounting perspective, general government gets it and then it's distributed out after the excess line to each of these departments. So financial reporting sometimes tells a story, and sometimes that story is what you want it to tell, and other times hands are tied to not tell that same story. But I would suggest that when we look at a comparative version of things, it does make sense. It's just that you need to know how to explain why policing can't pay for itself. And I don't know if that's necessarily a funding model that the City of Grande Prairie wants to get into. I could draw jokes about defunding the police, but I don't think it's the right time. Into the notes, I just want what I'll do is highlight the changes related. The summary of significant accounting policies is just a way to compare apples to apples when you're looking at different organizations or different municipalities. There are oftentimes choices that can be made within the policies that are followed, the accounting policies, and so these lay those out so that if one was to take the City of Grande Prairie and try and compare it to another similar sized municipality, these would lay out the assumptions and the decisions that were made on how numbers are drawn through the statements, and so that you could identify if you actually are comparing like numbers to themselves. On the cash note, there's a little bit of new disclosure in here this year, and that's with respect to the $5 million credit facility, the line of credit that was entered into. And so those disclosures are important for users to know that these are there, and we do show that there were no amounts withdrawn against the available balance at the end of the year. Trade and other receivables, you'll see Danielle spoke to the government grants receivable that had been committed by the various other government organizations that were then received after the year end. So a large increase in government grants receivable related to MSI, ICIP, and MSP. Agreements receivable, some slight changes to the disclosure here from past years, and that's where we're talking about forgiven debts, we're talking about deferring payments versus the regular disclosure of typical where you would expect these different organizations to repay. There was decisions that were made that impact those repayments, and so those are disclosed within this note. Carrying down to accounts payable and accrued liabilities. This note was adjusted for format this year. The accrued payroll and employee benefits line has been expanded in an attempt to draw out of trade payables all the amounts that were related to items that are with respect to payment to employees. Well, what we identified after this draft had been forwarded to committee for your package was that the accrued payroll and employee benefits of $8.2 million and $8.1 million also includes, and pardon me, I'm going to jump here, the employee benefit obligation of $4.3 and $3.6 million respectively. So now going back to that note, what that means is there's no change to the balance sheet. There's no change to the statement of financial position, but this $8.2 million needs to become $4.3 million less, and this 8.1 needs to become $3.6 million less. And the plug, if you will, is up here in trade payables. So in this note, as it currently sits, trade payables is understated $4.3 million. Accrued payroll and employee benefits is overstated $4.3 million. This 8.2 represents the total amount that is due to employees, but it's double counting an amount that's shown on a separate line. So for the version that we would recommend forwarding to council for approval is I want to take the opportunity to fix this note before that statement goes to council for final approval. Otherwise, if you were to look at this $8 million plus the $4 million, one would think that there's $12 million owed to employees for things like vacation, overtime, accrued payroll, source deductions, LAP. overstating that $4.3 million seems a little bit excessive and is above that materiality threshold that we have. So because we have a statement here that's still in draft form, I think it would be prudent to make that correction. And so just to reflect back on that, Chairman Haas, I think that if there is when the motion is made, if a motion is made for these statements to go to council, I think that that motion could be made still today with these statements, as long as you tack on some wording along the lines of pending the discussed changes to Note 8. Moving on from there, in deferred revenue, Danielle discussed the increases to deferred revenue related to the various capital grants, but the money hasn't been spent yet. And so those are our new disclosures in this particular note. Note 11, nothing really to highlight here other than to point out again that next year there will be a line for $14 million of new debt that's been taken on subsequent to year end. And I think what I'd like to talk about on that too is related to the subsequent event of taking that debt on. A subsequent event, and we'll get back to that note in a bit as we continue to scroll, but this would be a good opportunity to talk about how there's a line of thinking where any new significant debt that's taken on or committed to, or a major capital project that would be committed to, could be considered a subsequent event. Nick, myself, and administration discussed this particular $14 million. It's been in the long-term capital plan for years. It's part of the city's regular and ongoing operations. It's different than a small mom-and-pop shop buying 214 Place or something like that and taking that out with full debt. That would change the nature of your organization, or it would be something that someone would need to know. We don't feel that this qualifies as needing specific disclosure within the financial statement this year because of just the nature of how it's in line with what the city's been doing and what the city does. Another factor that we looked at when thinking about that $14 million is how much debt limit was remaining, and perhaps if that $14 million was going to push the city to the debt limit ceilings, then maybe we would want to disclose it as a subsequent event. But again, it's only 10% of the debt limit remaining. Again, some of this debt limit includes the impacts of the airport and the impacts of the library on here. So this number is different from just the unconsolidated city. But at the end of the day, whether you're looking at 145 or the 125 million, the 14 million doesn't press too hard against that. And so we don't feel it needs specific disclosure. The breakdown of restricted surplus, again, highlighting that it's been restated and reference to note 23, where we'll see what that means and how it affects. Standard salary disclosure, that's required. The subsidiary operations being Aquaterra and how it all flows through the statement. Transactions, funds held in trust, again, no changes to those types of disclosures, and so a necessary reconciliation of the approved budget to the surplus that's shown in the financial statement. That's a requirement. Again, we don't want to just sit on $52 million budget surplus. That doesn't look good necessarily when your budget was a balanced budget, and so that brings it back to there. The prior period adjustment note discusses the switch from deferred revenue to reserve and the piece of land that needed to be reinstated into tangible capital assets. That was dating back to 2016. Standard contingent liability, standard commitment note, and the subsequent event. And as much as the pandemic has been ongoing, because there's still future unknowns related to it, we felt it prudent to still say that there could be some future impacts from the pandemic on on the city. And so that is the audited financial statement. Open to any questions, Chairman House.
Thank you very much, Devin. You did a great job. So any question for Devin on this conversation? Dylan, go ahead.
Thank you, Chairman. Also, I had one question. I'm not sure. It might be for Danielle rather than Devin, but it's going back to page 4 under expenditures. Makes sense. COVID changes a lot of things, but there was $7 million more spending in community and social development than budget. This shows, and that I had troubles reconciling and figuring out what was going on there. So can I get a bit more information about that, please?
Certainly. Through the chair. I'll answer that one, Devin. Thank you. So with our community social development, a lot of the grant fundings that come in and are just going out are not actually budgeted in our operations. So a lot of those flow through fundings. I'll direct you, if you do look at government transfers for operating, your second revenue line item on that same page, you'll note that that's also quite higher than budget. So same situation. We don't budget those ins and outs within community social development.
Gotcha. Thank you.
Any other question? Well, I think, Devin, you've done a good job. Nobody asking questions. So, Eunice, go ahead.
I'm ready to make a motion then. I will move that committee recommend council approve the audited consolidated financial statements of the City of Grande Prairie for the year ended December 31st, 2020, as amended to reflect the changes required to Note 8, accounts payable and accrued liabilities. So is the recording, admin would make that change to how it's reflected in our notes here. It's actually Note 8 rather than Note 7. Thank you.
So motion is on the table with the amendment. So any question on it? If it's not, all in favor? Motion carries unanimously, and I think we're done with the consolidated budget, and now next one. All right.
I just got one comment, Councillor Minhas. I think the report was very, very well done and very much explained. And the requests that we had for last year were brought up this year. So thank you for acknowledging those and placing them in the report. Thank you.
Thank you, Kevin. I really appreciate that, Kevin. You've done a really great job, and Daniel and Shane. I really admire you guys have done a great job. Thank you very much. And with that, now we are on outstanding items.
Thank you, Chair Minhas. Item 1141 is on track, and we've added a date for the end of May for that report. And on 1133, the 6-week social media campaign providing information on door-to-door sales has begun. So I would ask that or recommend that this be removed from the outstanding items list.
Thank you. Need the motion, Kevin?
Yeah, I'll make the motion to accept the outstanding items listed as documented. So there were some replacements and some, yeah, we're good.
Thank you. Motion on the table, all in favor?
Yeah.
Motion carried unanimously. With that, we're done cooperative meeting. Are we going to go on in camera now, or are we going to finish it off over the rest of the meeting?
Councillor Minhas, the in-camera will be held after the last standing committee meeting of today.
Okay, thank you very much. So we are in the minutes, and now is, I think, Wade, your term next.
Oh, that'd be me.
Oh, sorry, now you.
Yeah, just give me a second here.
Sorry, we're going to take our break between